What's going on, traders? Today I'm going to be bringing you a video on the indicators that I use for trading. So as you can see, I'm on TradingView, and I have the Ripple USD chart pulled up for Bitfinex, and as you can see right away, you probably see these three different colored lines. You have this blue line, this red line, and this black line. What these are they are moving averages. They are simple moving averages. They're not exponential. They're not weighted moving averages, and they're not volume weighted moving averages. They're just regular, your standard moving averages. And the values for each of them are the 20, 50, and 200. The 50 is the red one, the 20 is the blue one, and the 200 is the black one. Also, the other indicators I use, I have RSI, just your regular RSI standard values. I have the 14 period, and then the overbought, oversold lines are at 70 and 30. You can see the 14th for the length, and then the MACD. Now, you guys might be a little kind of confused as to why it looks like this. Well, that's because I customized my MACD. It's not the standard MACD, the 12, 26, 9, I believe it is what it is the regular settings. I think it's usually 12, 26, and 9, but as you can see, I have mine changed to different settings, 3, 10, and 1. And what this does is it allows for faster reactions to the price. So for example, it could pick up bullish and bearish divergence faster than the other MACD settings would, and it's just more responsive, and it gives me faster signals. Is basically the reason why I have it customized. And as you can see, I took off the signal lines. I just read the histogram. Didn't mean to do that. The histogram is all I read. The history, yeah, like I said, the histogram is all I read. So that's why the signal moving is at 1. If I were to change it, then you'll start seeing the different lines and stuff. So I have it at 1, and yeah, just like that. Okay, I don't know why I was just messing around with there. Yeah, guys, so those are the indicators that I use, and let me show you how I use them, starting with the moving average lines. So the 200 moving average I use as a way to see if we are an uptrend or a downtrend, and basically that's gonna tell me whether I should go long or short in the current situation. So if the price is above the moving average, as it is right here in this section, you can see that it is above the 200 moving average, then I'm only going to go long, no shorts. However, when it's below the moving average, the 200, as you can see, all the way from right here to here, all the way from right here to here, just like that, this area right here, I'm only going to open short positions. And as you can see, we just kind of crossed it a couple days ago, so now we are in a downwards trend. So yeah, the 200 MA is used just for the long term of the coin or stock, whatever you're looking at. And then moving on to the 50 and 20, these are kind of my signal lines. So what I'll do is once we're over the price, once the price is over the 200 MA, I'll look for crossovers between the 20 and the 50. So once the 20 were to cross the 50, I would go long, or that's just an extra confirmation to go long. And once we cross again to the downside, that's when you would sell. So as you can see, if you wanted to, you could have played it risky. So let me start by saying this. As you can see, we crossed down here, the 20 and the 50, but we were below the moving average. So I'm not going to go long because we're below the moving average still. Anything can happen. We could still continue downwards. But once we cross the 200 moving average, and since we already crossed the 20 and the 50, that's my signal to go long right here on this candle. Once I see this candle form over the 200 moving average, I'm going long. And as you can see, I stay in the position until we cross over the 20 and the 50, which is about right here. and that's a 30% gain in 14 days, risk free, and you don't have to do anything. You don't have to manage it. You just buy it, and then once you see this, you just sell. So you really just check your charts. What do you want? Maybe twice a day, and you check them, and you see that they don't cross. That these 20 and 50 haven't crossed yet, and you're like, okay, I'm holding it. And one day, once you see it crosses, you say, okay, it crossed, so I'm gonna sell. I'm gonna take my position out right now and take my profits. So yeah, guys, that's how I use the moving averages. I'll say it again. The 200 is determines whether I'm going to go long or short, and the 20 and 50 are kind of like my signal lines. You can also use them as support and resistance, but I don't really do that. You can also use them as, like, if you want to just use like the 20 as a way to go long. You could buy when the candle crosses over the 20 moving average, like right here. As you can see, it was under the moving average, the 20, and then it closed above it right here. You might have wanted to wait for another candle to close like this to give you more assurance. Then you would go long, and then once you closed under the candle, you would close your position. So right there, 25%, 4 days. But that's more of a riskier type of trading, because as you can see right here, like, you'll take trades and they'll be sometimes losers, and you'll be wasting time for nothing. So right here, you would have lost on this trade right here. You would have lost 1.5% in 20 hours. So yeah, I like to use the crossover strategies. I feel like that's a very powerful strategy, yet very simple for anybody to use. So yeah, guys, that is the moving averages. Let me show you the RSI and MACD. Let me go ahead and hide these. Oh yeah, and I have volume, just plain old volume. You know, you gotta have volume. Gotta be able to know to read volume, because when you have a move that, let's go bring these up. When you had this candle right here cross the 200 moving average, and you see, look at that volume it had, the most volume in days, and it crosses that, such a big, like, I don't know, like a barrier. Like the 200 moving average is like a tank. It's a barrier. If it crosses, especially with a big candle like that with a lot of volume, you can definitely expect the move that it's going with that candle to continue on. So with this candle, you saw it going up, it's definitely going to keep going up. However, if you would have saw this candle be red, like a big red candle like this with a ton of selling volume, you would most likely see a big downtrend to follow that candle. So yeah, that's enough of the moving averages. Sorry about that, guys. So let's move on to RSI and MACD and what I use them for. So right here, let me hide the volume as well. MACD and RSI are simply for finding bullish and bearish divergences. And what that is so bearish divergence would be when the price is finding a higher high, like we have right here, higher high, and then on the indicators, the RSI MACD, you have a lower low, showing a lack of strength, like losing strength in the market, or not market, but whatever coin or stock you're watching. That means that it's losing strength. As well as the MACD, I like to use too, because it gives me double confirmation that is my bad, I did not mean to do that. That it is in fact bearish divergence. And as you can see, once we completed the red candle, the signal bearish divergence, look at this price drop we had. We had this big price drop of over 13%. And what I do is, once I see bearish divergence, I'll start setting up my horizontal support and resistances to see, find a spot where I could see that it settles. So right here, you would see that the market kind of just settles right here, and that would have been a very good point to buy. I also use the MACD to, once the histogram starts ticking up like this, I know that the coin is getting stronger, and so I'll most likely buy. And as you can see, if you would have started buying with this strategy, once you saw the uptick, I should say you bought right here on this green candle. You could also throw in your volume indicator, see if you're getting volume, and if you are, that's even better. So right here, after this green candle, or these two right here, you see you'd have this same amount of volume, which is good, and these two full green candles. So let's say you go long right here. That's a quick 6% profit right there. at least minimum. If you were to wait, you could have held it all the way up to here, right here, but that's for different times. So let me show you some more examples of. Let me show you some bullish divergence. So right here, this isn't really a good example. It's not honestly even a good example. I'm not even gonna use it because you're having the. Okay, and so yeah, let me say this, that it is not a 100% strategy. As you can see right here, bullish divergence is when you get a lower low on the price action but a higher high on the indicators. So right here you see you get the lower low on the price, lower low, right? Get this out of here, man. Alright, so lower low, and then we still have the lower low on the RSI, but we have bullish divergence on the MACD, and you see that we still dropped, which is why I like to make sure that there's both bullish divergence on the MACD and RSI, because it's like a double confirmation. And yeah, so just use those two as a confluence with each other. And let's find some more examples showing some bullish and bearish divergence. I was gonna say this, but right here you don't really have a lower low. It's kind of like the same, so you could have gone with it. Actually, you do have a lower low, very little lower low as you can see, very little compared right there, and you are seeing that it's gaining strength. So if you would have gone long right there, I personally wouldn't have, because that lower low right here on the price action was not convincing enough. You could have booked yourself after this red candle closes. You see the lower low. So let me show you like what I mean when I say after you see the candle close. So look, you see that candle closed, and you see that little edge right there. That shows that there's bearish or bullish divergence. So you'd have gone long on the beginning of this candle right here. And let's just measure it out, how much profit you could have taken. Could have gotten 13% profit in 2 days, almost 3. So this strategy is powerful. It is simple but very powerful. Like I said, guys, the most simple things can sometimes be the best things, and you don't need all these fancy indicators. Your chart does not need to be cluttered with a bunch of crap that's the same thing as just price, but just confusing. So let me show you guys some more examples. I might have to hop on a different chart to show some bullish divergence. Close right here. This is close right here, but you don't have the higher. I mean, you could have taken it with the MACD if you wanted to be riskier. Once you saw the higher high on the MACD and the lower low on the price action, but you don't get a higher high on here. You actually get a lower low. So I don't know. That'd have been a risky trade, but it could have paid. It would have paid off with over 30% profit in 1 day. It's crazy. Alright, so let's try to find some other lower lows. Okay, right here. This is perfect. Perfect right here. It's perfect. And what I mean when I look for lower lows, I look for like big dips. Like you see, like these are big dips right here with retracements. So that's when I look. Like I don't just look for like little lower lows like let me see, like right here, like that's a lower low right there. But I'm not looking for that because it's such a small, like it's so close to each other, it's not significant. I don't want them to be too close to each other, but then I don't want them to be too far. Like I don't want this to be connected with this, because that might not really give me a good signal, you know. So but like right here, this is perfect distance from each other. You have this lower low, and let me just show you guys the distance between this candle and this one, just to give y'all guys an idea of how long the distance would usually be. So about 3 days, or 23 bars on the 4-hour chart would be suitable for a nice signal. As you can see, the lower low, higher high on the RSI, as well as the higher high on the MACD histogram. So now you take this trade once this candle completes, or no, actually you would take it on this candle, because after this candle it could have still dropped, but then once you see this green candle form, you know that you get this point right here. You know what I mean? Because after this candle it could have still been going down, but once you see this candle complete, you see this little points complete, which gives you the full signal for bullish divergence. So in this case, we'll start from right here at the beginning of this candle, and You could have ridden it all the way until you see oversold levels, which is what I typically do, and that would have masked you over 82% profit in 3 days, guys. That is crazy. So yeah, guys, that was just that was an example. Here's some more. This is bearish divergence right here. You get the higher high, you get the lower low, and you get the lower low on the MACD histogram as well. And what do you know it? If you would have shorted this right here at this red candle, let's pull out our little short position. You would have shorted this red candle right here. You would have waited till it's oversold or overbought, right? Yeah, overbought. No, is that oversold? Yeah, oversold. Oversold when it's on the bottom. Yeah. Okay, so you wait till it's oversold, which would have been this candle right here, and you would have masked 20% profit in about a couple days. So yeah, guys, those are the indicators I use. Nothing crazy, all very simple. I hope that you guys take into I hope you guys consider using these indicators in your trading. You don't have to use them on the 4-hour chart. You can use them on the 1 minute, 3 minute, 5 minute, 15 minute, 1 hour, daily chart. It's your preference. You are the trader. I'm just giving you the tools that I use, but by all means use them the way you want to use them. For all I know, you could not even care about these divergences and these moving averages, crossovers. You may use them a different way. Like I said, you could use the moving averages as resistances and support. You could just simply use overbought and oversold levels to find entry points. By all means, guys, you are the trader. I'm not in your position, so you use these indicators the way you want to use them, and I'm going to do the same. So yeah, guys, that is the end of this video. Please, like always, if you have any questions, just let me know. Message me or just leave a comment down below. I hope you guys all enjoy this video. Be on the lookout for more videos. Let me know in the comments as well what kind of videos you want to see. And yeah, guys, until next time, make sure to always trade safe, take profits, and minimize risk as much as you can always. Alright, guys, thank you all for watching. I'll see you in the next one.